Morning, everybody. We got a lot to get to. This is an important week for the stock market, and this video is going to inform you on what some analysts are predicting over the next week in the short term for the stock market, and it might help you decide what you should do with your portfolio long term. All right, so first thing out of the gate, this article just came out this morning at 7:30. Morgan Stanley's Mike Wilson says it's time to fade the rally. The bear market rally is hitting resistance levels that suggest it is time to take profits, according to Morgan Stanley. So this same guy apparently in October said that the counter trend rally had legs to the S&P 500 up to 4150. As predicted, falling interest rates at the back end have led to modest further gains for this bear market rally. Wilson wrote in a note on Monday, however, with last week's price action, S&P 500 is now right into our original tactical range target of 4,000 to 4,150. Index has modestly exceeded its 200-day moving average, and the breadth continues to expand. The downtrend from the beginning of the year remains in place. This makes the risk reward of playing for more upside quite poor at this point. Investors should stick to defensive stocks or sectors, utilities, healthcare, and consumer staples, with rates falling further into next year as growth and inflation slow more. Growth stocks, the IWF index, especially large weighted tech, XLK, and consumer discretionary are unlikely to benefit from falling rates given earnings risk, he added. From a very short-term perspective, we think 4150 is the absolute upside this rally can achieve, and we would not rule that out over the next week or so. Conversely, a break of last week's lows, 39.38, which coincides with the 150-day moving average, would provide some confirmation the bear market rally is ready to reassert the downtrend in earnest. We just laid out some of the short-term risks, and you might be somebody who is more impacted by short-term movements in stock prices, and maybe this stresses you out or something like that. If that's the case, then what this article and this type of trading predicts might be worth considering. For me, in my companies, in the way that I invest, again, long-term investor, want to hold stocks 5, 10, 15 years, and not investing money that I need in the next 3 to 5 years. So by no means am I living off my investments. I really don't pay any attention to articles like this at all. Although I know that at any time, the market or my portfolio could drop 10 or 20%. Why do I invest this way? Well, this is a chart of Google stock, which actually has had some real challenges over the last year or so, down big time, right? But since 2004, with all the fear, includes 2008, this includes 2020, this includes the recent sell-off, the stock is up 3,900%. That turns a $10,000 investment in 2004 into $400,000. I will take a 10 or 20% drop in my entire portfolio at any time, in any year, to benefit from these types of long-term gains over a 15, 20, or 25-year period, and that is what I invest for. Let's talk about earnings in the week ahead, because we might start to see some earnings declines, and that could put pressure on individual stocks, the indexes, whatever. And although there's not a lot of companies reporting this week, there are some important ones that are going to give us an indication of the health of the economy, the health of the market, and kind of what to expect for earnings over the next year or so, potentially. We've got Costco, Broadcom, Chewy, and more reporting this week. Toll Brothers, Campbell Soup, AutoZone, Lululemon, Broadcom, Chewy, and then actually GitLab too, which is a company I own. So even though, there's not a ton of companies reporting this week, this is an important sample of, broader things in the economy. Housing, soup. So, how are people spending their money in grocery stores on essentials? AutoZone, this is car repairs versus new car sales or used car sales. I think in a recessionary environment, people are going to spend more money, fixing the cars they have and maintaining the cars they have than selling or buying new or used vehicles. Costco, I did a video on this. I think Costco is actually extremely overvalued, at least when you look at it on a PE perspective versus the S&P 500. It does deserve a premium, certainly, but it's trading at a higher multiple than it has at really any point in its history. And I just don't think that type of multiple is justified, even though Costco is a fantastic company. So we'll see how those earnings go, and we'll see what happens to the stock price. If I had a sizable long-term position in Costco and didn't want to pay a ton in capital gains taxes, I probably wouldn't be selling shares. But I don't have any position in Costco, and so I'm not looking to buy at $4.94. I've done a bunch of videos on Costco before. I think it's better around $420 or $400. Lululemon, again, are people spending on premium clothing? This is kind of a different category of shoppers. But if we start to see pressure on Lululemon, then it's a broader indication of the overall economy. Broadcom is actually an interesting dividend growth stock that if it got to a reasonable enough valuation, I would actually consider adding it into my dividend growth bucket. Then GitLab, which is a company I own, right? They're due to post their third quarter earnings after the close today, Monday. Shares are down 60% over the last year. It's near a 52-week low in November. Earnings per share and revenue expectations have been hiked a number of times ahead of the report. They beat earnings in Q2, and Tiger Global, which is kind of a famous hedge fund, exited its position in November. So the consensus EPS estimate is negative 15 cents. Consensus revenue estimate is 106 million, and they've beaten earnings per share and revenue in 4 straight quarters. So we'll see what happens with GitLab. Probably won't be making any changes to my position. I like the company long term. I will do an update after the company reports. And so there you have it. We have some important companies reporting this week. I will cover them and their earnings on this channel. So if you like this type of content, if you like the transparency, do me a favor and hit a thumbs up on the video. That helps more people find us, and subscribe to the channel so you get all of my awesome updates.